What's up, my fellow Harmonic traders? Welcome back to Track the Harmonic. You go to destination for all things Harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to dive deep into Harmonic technical analysis and what to expect next week, as we do have a big week ahead of us with some key economic releases that could shake things up. We're going to break down what to expect from the ISM manufacturing PMI, the ISM services PMI, non-farm payrolls, unemployment rate, and Jerome Powell's speech at the end of the week. So first up, we do have the ISM manufacturing PMI. This is a monthly index based on surveys of purchasing managers in manufacturing. So above a 50 could mean expansion, while below a 50 could potentially show signs of contraction. So it's a leading indicator of industrial health. We also have the ISM services PMI, similar to the manufacturing PMI, but for the services sector, think of things like retail, healthcare, and finance, which makes most of the U.S. economy, right? So it tells us services are growing or slowing down. We also have non-farm payrolls. This is a key jobs report showing how many jobs were added or lost in the U.S., excluding farm workers. It's a major market mover. Strong numbers can boost the dollar. Weak ones could potentially spark sell-offs. So we also do have the unemployment rate. This is the percentage of the workforce that's jobless and actively seeking work. So lower rates could suggest a tighter labor market, while higher rate could show signs of economic trouble. And last but not least, to end the week, we do have Jerome Powell's speech. So Powell's words can sway the markets, and he might hint at rates, at things like rate hikes, cuts, or the Federal's view of inflation and growth. So it's going to be very important to see what he has to say. So if you like this type of content and find it useful, hit that subscribe button so you never miss future videos. Share the video and drop a comment below with your predictions for the week. I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. Alright guys, first up we have the SPY. No current harmonic pattern so far on the daily here, so what can we expect here harmonically for SPY? We did come down all the way down to 582.44 on Friday before ultimately catching it bounce there for a $10 move to close the day at 594.18. As you can tell, we do have a retest line over here where you did fall through on Thursday, but Friday managed to claim above that, and you did form an HSI arrow to the upside after the harmonic strength index was completely oversold. So what can we expect here? Just looking at here, just the technicals here, if you do find a bounce here, we would like to see if it retraces back above the 382 here. So it's currently finding some resistance here at the 382. You could obviously break above the 50% and the 618 here, which is called the zone. You would look to see if that is going to break the momentum back up. So very key level here to see if there's continuation above the 618. You can start looking towards a break to the upside again to maybe create that higher high. The rejection here, and you go down below the HSI dot retest line, I do think we're going to come back even lower. We do have harmonics on the larger time frames. For example, the 3-day is one that I'm going to be looking at. We do have white swan, and we also have a D crab. So you can see that the rejection of the white swan at point D was at CD at 613.23, and you came down almost to test that 50 SMA EMA here around 581 here. So you did find support, and you're trying to break above the 21 EMA here, but if you fail and you come back below the 50 EMA, I do think PT1 to complete that white swan pattern could be next. You did cross the HSI midline off of increasing volume. So right now you're obviously getting a technical bounce, which is what we got on Friday. So we're going to see if that technical bounce is going to show some strength with support to the upside with volume to that comes with it. Otherwise, if not, then we will probably maybe even come back down after a rejection here. As you can tell, the EMAs on the daily here, a bunch of them are piled up here, so you're going to have a strong level of resistance here in my opinion. So it's going to be very important to see what it does above. If it gets there, if it breaks above, we can start looking for potential higher highs. If not, we might get rejected and make a lower low to test that 200 EMA there on the daily, as most of the blue chips, some of the blue chips, not most of them, but most of them have been approaching their 200 EMA. So one level to look at would be the retest line again around 588. You can start looking. This is an ABCD pattern that obviously has been validated because it went way above hot, but you can look at these levels of support. You do have one at 575. Below that, then you can start looking towards that 200 and then targets to the downside. If we go over to the weekly here really quick, just wanted to share where we have a retest line here where I found support on Friday, right? It went down to that 582 level. You did test it a few times here since November, and every time you come down here you have found support and started to break to the upside again. So if SPY is going to do that, we want to see this reclaim certain levels. Obviously a level above 602 could start sending it for the potential new all-time high and a higher high. If it fails that retest line, then I do have a level here all the way down to 562. This is obviously on the weekly chart, which would take some time to play out, but we're going to see what's in store here for a SPY. So volume did support the push up on Friday, especially with the volume that came at the end of the day there. So it's high volume, which could suggest that strength is coming in, and maybe the bulls are stepping up here to hold this level as support. We want to see follow through come Monday and Tuesday to see if in fact this is a level where it is going to bounce off of and continue pushing higher. So we want to see volume. But other than that, guys, that's all I have for SPY. It's going to be very important to see what the data suggests, as well with the unemployment and run for payrolls, and what Powell could suggest with but the potential next meeting, if we were going to actually do rate cuts or not. So definitely keep a close eye out on the SPY. Jumping over to the triple Qs here. So the triple Qs on the daily has this bearish butterfly pattern that I'm going to be focusing on here, guys. So the Qs, you can see that it got rejected here back in December at Hop, and then all of February has tried to break above Hop there at 537.15, but has found resistance here. You had that HSI dot and arrow trigger here back on the 20th, and from then you just continued to flush here off of increasing volume. You lost XA 525 below the 50. You came all the way down here on Friday up to 496.93, ultimately finding support there and climbing back up to close the day at 508.17. So what can we expect here for the triple Qs? As I mentioned, some of the blue chips are approaching their 200 EMA SMA. Some of them are actually below, so it's very close here for that attempt for the triple Qs to test that level, grab some liquidity, and then finally maybe catch some support. Right now, if you take a fair retracement from the swing all-time high to the recent swing low here, you can see that it just barely closing above the 236, where SPY is on its way to the 382. So you don't have the HSI arrow trigger to the upside here for that reversal like you do on the SPY. So we want to see on the triple Qs, mostly tech is what I've been noticing has been bearish. The financial sector has been actually pushing on upwards. I think XLF, the financial ETF, got very close to test new all-time highs. They missed it probably by a penny to create a new all-time high. So the SPY is being held up by the financial sector, in my opinion, whereas if you look at the NASDAQ here, the triple Qs, you can see that it's heavily weighted on tech, and tech is selling off here lately. So it's going to be very interesting to see if the triple Qs actually comes down here to test at 200 EMA SMA, where target one is at 487.27. You also have a retest line there at 491, 490ish. So if you come down to that T1, you complete the type 1 reaction, and then you could expect a reversal. It'll make sense that you come down here to test a key level there at the 200 moving average, find some liquidity there, maybe catch support, and start going up to the upside after that. So right now, you don't have the HSI arrow trigger to the upside, so we don't have the reversal signal just yet. We're going to have to wait to see if Monday and Tuesday follow through with volume, and it triggers that HSI arrow to the upside to maybe play up to the upside as these levels back up. So the levels for the triple Qs to the upside that you want to reclaim, obviously you have to come back all the way to that 50. It's at 520, XA at 525, 537, and then maybe you could see a new all-time high. If it fails here, you come down to below 503, which is my support line. You come down to fill that gap at 493 and change, test a 200 EMA and the target one reaction here, so 487.27. If we go over to the weekly here, you can see that it did close below the 21 EMA off of increasing volume. So right now we're going to see if this ABCD pattern is at play, because it also is finding resistance at Hop. It did come down below ABCD there at 498.04, but finally found support above 503 on that push on Friday. So if this fails, we're looking at to see if it closes below 498. Below 498, you could start looking at a retest of the 50 EMA there around 483, and then more downside should it come to that point. So definitely keep a close eye on the triple Qs and NASDAQ right now, especially since it's heavily weighted tech, and tech, some of the blue chips, like I've said, are below the 200, and some of them are approaching the 200. So we're going to see if there's continuation in selling off of the certain tech sector. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones, guys, has no current bearish harmonic or any harmonic pattern here on the daily yet, but we do have something that's interesting here. It looks like it's in a a channel here, sideways channel, where you have an HSI dot retest line here on 448, 449, and the bottom one here at 425.26. As I bring up my drawings, you did form the HSI arrow here back on Tuesday, but ultimately failed that, and right now you're looking to see maybe if you do form an HSI dot to signal that strength in the upside on Friday. You did get some volume to the upside, but ultimately you're finding resistance here. One thing to note that this is potentially forming an inverse cup and handle here, right? So if you get rejected here, look for that to come. If that plays, a pattern formation plays to the downside, you'd be looking at these targets here. There is a gap to fill right where the second dot retest line here is around 425 and change. And if you fail that, I do have a support line all the way down to 420.72. As you could tell, the last time you came up here, you came all the way down to 418, found support, and started to climb back up. So we're going to see if that's resistance here. If you do find resistance, then we look at to close that gap fill, come back to 420, where the 200 EMA is very close. The 200 SMA is around 418, which would make sense to come back down here if it does lose momentum. If we go over here to the weekly real quick, you can see that it did form a hammer candle, and it did find support above the retest line and above the 21 EMA of high volume. The HSI did cross the midline, so we're going to see if there's continuation. Like I said, we're going to have to see if Monday and Tuesday bring volume to support the push up that it got on Friday, because this is a hammer candle by definition. A hammer candle is a reversal signal potential to the upside here after it came down and lost some levels. So right now, key level to watch out here for the for the Dow Jones here is these 21 EMA here to see if it breaks above it and invalidates that inverse cup and handle. Otherwise, we might be looking for more downside. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So the Russell 2000, one of the ETFs that's already approaching and lost the 200 moving average here. You could tell here got very bearish with the increase in volume here on Friday of last week, and we continued selling off here. You do have a bullish white swan and a bullish shark pattern that did form on this, but ultimately failing that reversal, right? You did form an HSI arrow on Friday to the upside, where you did reclaim here off the white swan, the CD target there, roughly where the same targets here is for the shark pattern. As let me just remove that indicator here. The terminal bar around 219 or 213.97, 214, where it's currently at here. The same thing for the white swan. So next targets to the upside for IWM, if it continues climbing back up, is to test that psychological level there at the 200 SMA, which is around 218, 219. See if it finds support there. If it fails that, then you come back down to where that terminal bar CD there at 214 and change. Below that, then you do have hop at 210 and OPR for the white swan at 208.53. So we want to see, like I said, continuation to the upside with volume to support the move that it got on Friday, because if it doesn't get it, you might just get a technical support bounce here to test a key level for the IWM and then make lower lows. If you break above to the upside here, the next level you'd be looking at would be the 220 range here with that dot retest line. See if you can climb back up. As you can tell, you also had a channel upwards here where you did trade, and then you finally lost that level. So that's going to be a huge level to gain back to the upside. If you claim that, you can look to see T1 again at 229.48, PT2 there for the white swan is at 223, and then target 2 to complete the full type 1 reaction off the shark pattern is at 241.44. So right now, if we go over to the weekly, you can see that you have a few patterns here, right? You still have the bat pattern, you still have the bearish white swan pattern, and you did complete the bearish bat pattern type 1 reaction at target 1 at 211.55. You went as low as 210.96 for the week here, and you completed that type 1 reaction. So we want to see here, after a completion of the type 1 reaction harmonically, for a potential type 2 return to hop down the line. This is obviously on the weekly. This could take some time to play out. One thing to note is that you did get the 921 crossover, and you did close below the 50 SMA here off of increase in volume, and the HSI dot, you can see the HSI midline, you can see that it got rejected at the midline and is coming back down to maybe test those oversold conditions, and those oversold conditions could mean that IWM pushes even further to the downside, where on the weekly you have a retest line here at 206, a level of support here on my line here at 201.99, and you do complete the type 1 reaction at 203.05 from the bearish white swan pattern. 200 SMA there on the weekly is at $200, and the 200 EMA there is at 196. You complete the full type 1 reaction. If this actually goes to the oversold conditions, I do think it's going to be towards that, close to that T2 target if there's more volume to the upside here for IWM. One thing to note here, especially with IWM, with the mid-cap stocks, right, everybody's looking at potential rate cuts, so I think the mid-cap stocks will benefit if there are rate cuts. You can start seeing this push back to the upside, so it's going to be very important to see what Jerome Powell is going to say because IWM is coming down, similar to Tesla. Tesla will be covering as well how it's been affected right now. So rate cuts will benefit these mid-cap stocks where you could see that bounce, but we have to see where it catches support and if we're going to get those rate cuts. If not, I do think you could see more downside on the Russell 2000. So definitely keep a close eye on IWM. Alright guys, jumping over to XLF here, the S&P sector, financial sector ETF. Crazy, I've been saying this for the longest, that these banking sector, the financial sector has been very strong lately, literally not believing in any pullbacks here or any tariffs, any situation that's been going on in the markets right now. This thing has continued to benefit the banks here. The financial sectors just continue to push. It's crazy to see that the XLF ETF here attempted its previous all-time highs. Previous all-time highs was at 52.26, and it attempted that same level where it got rejected there at 52.26 on Friday. So my opinion, this is why you didn't continue pushing to the downside here in the market, as the financial sector started to pick up some slack there in the market. So what can we expect here for XLF here? We do have this bearish shark pattern. As you can tell, it is finding support above terminal bar, and it actually broke above on Friday above the terminal bar, and it's finding resistance at that 1.13 OB at 52.25 of the pattern. If you break to the upside here, you'll be looking at a new all-time high at 52.87. If you do find resistance here, you'll be looking back down to the terminal bar at 51.44. Below that, then you start looking here at the 50 EMA there at 50.55. SMA is at 50.14. And then if you lose that terminal bar off with volume, then you can maybe start seeing for a potential opportunity there to play the type 1 reaction at target 1 at 49.54. Right now, it doesn't suggest that because the volume did come in on Thursday with high volume compared to Wednesday. And then Friday, you had follow through with even more volume to the upside, where you did break above the HSI midline so far. So we're going to see if there's more continuation in the financial sector here towards a new all-time high. If we go over here to the weekly, you can see that the weekly was high volume, and you do have this bearish crab pattern on the weekly calling for a new all-time high, even above the higher target on the daily at HOP at 54.41. So financial sector, in my opinion, is very strong here. So I'd be looking to see if there's more upside here on XLF. You can get bearish below terminal bar to potentially start looking for that type 1 reaction, but right now that's not clear yet. So definitely keep a close eye out on XLF. Jumping over to XLE here, guys. So XLE, no current harmonic pattern on the daily. So what can we expect here for XLE to the upside and to the downside? On Friday, you did find support above the 50 SMA. It's currently finding support here, and ultimately on Friday, you had that push up almost going above 1.5% on the day. You did close at 91, and you did reclaim some of these EMAs here to the upside. So we are looking at here for that potential cup and handle here, right? This is a cup and handle. You could potentially come back all the way up to above $100 target. We do have a retest line here at 94.74. And the HSI is approaching that midline. So it's going to be very important to see that midline would probably be around 92.95 to see what it does there. If you break to the upside, I do think you might be coming up here towards that $97, $98 target. On the weekly here, you did flip almost a hammer candle, and you did reclaim the EMAs here slightly below the 50 SMA, but if you can recover there, the last time it did try to attempt to break above, it got rejected here around $93 here where the HSI dot retest line. But you can see that you had anytime it crosses above the midline here, you have a push up towards 98, which you did here in April, and then you broke above it here in November, where you did go as high as 97, 92. So it's going to be very important to see what it does at that retest line, but that's pretty much all I have for XLE here. Targets to the downside really quick though, you can look to get bearish below the 50 SMA, which is around $89. There is a gap all the way to fill down there at 85 and change, and then failing that would obviously come down to that support line at 82.51, where you did kind of find support here a few times. So we're going to see what XLE has in store for us this week. So definitely keep a close eye out on the energy sector. All right, guys, jumping over to Apple here. So Apple had a nice level of support here on Friday with huge amounts of volume that came in at the end of the day here, and you did flip this candle into a hammer candle, and by definition that is known as a potential reversal. It's a signal that it is going to find some support here and continue to the upside potentially. We have no bearish or bullish harmonic pattern on the daily here for Apple. We did trigger an HSI arrow to the downside on Wednesday, but you can see that it came down off decrease in volume, and on Friday you kind of just completely almost coming back up to reclaim some of these levels. You did find some support above that retest line there at 229, and if I was to bring up my drawings here, the next levels I'd be looking to the upside here do have a support, or excuse me, resistance line here, 242.22. If you break above that, then the next level you'd be looking at would be at 248.48, kind of close where you got rejected here earlier in the week. You did go as high as 250, but could not claim that level as support. And if you do claim that level as support above 248, then you'd be looking at potentially the retest of previous all-time highs at 260.10, and then to create a new all-time high at 262.71. If you do fail 242.22 here, the next level I'd be looking at would be 50 EMA at 238, and then come down to test that retest line at 229 and change. And you do have the 200 EMA down here all the way to 224, and even a gap all the way down to 216, 217 and change. The HSI did cross the midline. It is still looking like it wants to push down, but we want to see if Monday into Tuesday, see if that HSI starts to curl up. If we take a fair retracement from this previous all-time high to that swing low here, you can see that earlier in the week it did claim above the 618, but we're not able to close above it. So that is still going to be a huge level of resistance there. Friday you did push up because you did lose that 618. You came down to the 382, but you're trying to find support above the 50 here. If we go over here to the weekly, you can see that if you take that favorite retracement, same favorite retracement from previous all-time high, you can see that the close is still above the 50%, and it is trying here for Apple to hold above that level. If break above the 2618, you can start seeing potentially making a higher high and having that M formation that it has here. So you create that M formation there, whether a double top or a harmonic target, which would create maybe a shark, maybe a D crab, who knows, depending on how high it goes, if it reclaims targets to the upside. So definitely keep a close eye out on Apple. Jumping over to Microsoft here, guys. So Microsoft is one of those blue chips that I've been mentioning that's below the 200 moving average. As I bring out my drawings here, there's no current harmonic pattern that's playing out so far on the daily. There are some previous harmonic patterns that you could look for as just levels of support. As you could tell here, there is a level of support that I drew here at 386.73. That is a level I've been watching for a long time here on Microsoft, and you did go as low as 386.57, and on Friday you had some volume come in here. The HSI did start to curl back up to see. So it's going to be very important to see if this is actually going to start finding some support to the upside. Like I said, we want to see volume come in to support the reversal here, because you do have a potential death cross approaching here on the EMAs. The SMAs already crossed, so you know, we could argue the case that oscillators are lagging indicators, and that death cross already happened in this push to the downside. That also could be true, but we're looking at here to see if volume supports this push up that it got on Friday. If we go over here to the weekly, one thing I'm looking at here, why the 386.73 is a huge level of support, because when we broke back above it in January, you can see that it went as high as 430, 429, 430 here, came back, grabbed some liquidity, and then finally pushed to make even a new all-time high. And from that point on, you came all the way down again to 386, grabbed some liquidity, and tried to make attempts for new all-time highs again, but ultimately finding some resistance, and you came down again. So after the breakout, it was 1 touch, 2 touch, 3 touch as a level of support. Does Microsoft find some support and start looking back above some of these levels? First things I would like to see would be at least a 50 EMA here, back up to 413, where there is an HSI dot retest line. If you don't find some support here and you start looking back down to 386, it can get very bearish for Microsoft, back down to hop there at 368, and then even lower where there is a few gaps to fill to the downside. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon, guys, I mentioned the past 2 weeks that this was going to be a bearish move to the downside here. And it's exactly what happened here. The bearish white swan and the bearish D crab here. You can see that the bearish white swan at the completion of point D here at CD there, you straight just came down here all the way to PT2. Even below TBT2, you came down this week as low as 204.16. I did mention that Amazon looked bearish, and you did find some support above PT2, but ultimately closed. And on Friday, you were looking to come back to even complete the type 1 reaction off of D crab at 201.91, but you did get some volume to the upside, where the HSI arrow did trigger. So you can see that the HSI was completely oversold, almost close to testing that 200 EMA where target 1 is. So again, we're going to have to see if this volume that came in on Friday all around across the market is actually a strong level of support with more volume to come. If not, I'd be looking at it here for Amazon to see what it does at PT2. If it loses PT2, we know that these white swan patterns can get extremely bearish really quick for downside all the way down for the white swan. We have 183.03. Obviously, it is trying right now, Amazon, to claim back PT2. You're looking at also here a retest of 214.69. If you reclaim that, then you're looking back up to 224.65, just slightly above that 50 in the 21 EMA. One thing to note is that on the daily, you did get the 2050 crossover to the downside. So I'm going to see what it does here towards that attempt here that it had at the high of the week there at 219.97. So call it 220. See what it does there. If it fails there, then you're looking for downside back down to that T1 is what I'll be looking at. 201.20 is also a level of support that I have drawn here. So look at that psychological level around 200 if you get some rejection here around 220 and change. If you reclaim obviously 222, 224, then you're looking at targets to the upside here. If we go over here to the weekly, you can see that it closed below 21 EMA, closed below 214.69, and you did come all the way almost close to top there at 203.04. The HSI is approaching the oversold conditions, but it does not mean it can't continue. There have been points where you got all the way down to negative 4 on the HSI there. So we're going to see if there's more continuation here to the downside for Amazon, or if it's going to finally find some support here. If you take the previous all-time high to where it came down here, where did it find resistance on the week there at 382? And like I've said, guys, in my in the videos here and on when I go and stream live, that where there's something taking place on the macro harmonically, you could expect the retracements back up to be around that 382 to 236, which means that it's very weak levels of support after retracement. So these impulse waves that come down, and if you're getting rejected on the micro around the 236, 382, maybe even the 50%, that means that there's something more taking weight on the macro, and we are seeing that harmonically on the daily with volume to support those moves. So potentially expect any pushes to the upside here to be short-lived towards that rejection around the 236 and all the way up to the 382. If you find resistance there, then you know that there's something else taking more weight harmonically on the macro, meaning that there's more downside to come. So keep a close eye out on that, and definitely watch out for Amazon here, because you do have potential for this to come back all the way down to that psychological level at the 200 level. So keep a close eye out on Amazon. All right, guys, jumping over to Tesla here. So for those of you who've been watching the stream and also been looking at my videos here, the weekly videos, you guys knew that I was bearish on Tesla after the bullish bat pattern triggered here. A lot of people I've seen were calling towards the 380s, even $400 during this time period, and I had mentioned to you guys had to hold on if you had, because harmonically you were going to come back down. I had a target at 325 as a level of support, and you did go there, but then you continued flushing all the way down to hop there. You did go all the way down to the 200 SMA on Friday, where you did find support, and that HSI arrow did trigger. So I was bearish here on Tesla to come down first to grab some liquidity, and now you're looking for a potential reversal here. So now again, I'll mention it again, that we need to see volume pick up here. The next level you'd be looking up to the upside here would be 302.28, then XA at 329.66. You cannot harmonically start calling it to the upside here towards 387, 400, unless, in my opinion, you break above XA there. XA is going to be your level of support or resistance here that you have to break above. If you turn that resistance to support, then the next level you'd be looking at would be up here again to 367, and then you could look towards T1, and then maybe down the line at T2. Right now it's obviously still unclear from a most recent swing high right here to swing low. We're just barely on our way up to that 236. We're not even close to start looking bullish just yet, so we're going to see if there's volume that's going to come up here for Tesla. We could also look at the first impulse wave here. Also, you could argue the first or second impulse wave, depending on where you look at. Look where it came down to find support. It came up all the way down to all the way up to the 382 here, just slightly below the 382. Was where you found some level of resistance. So if this is the first impulse wave here, first impulse wave corrective move, you can see that the 382 is resistance. So The 236 is where we're currently off of the support level that we got on Friday. You're at the 236. The 382 would, I believe, if we look at it here really quick, would be that 200 EMA. Just slightly below the 200 EMA, which is at 309.75. If you get rejected there, then you could maybe start making a third impulse wave down, meaning you're going to maybe create a lower low here. That lower low could potentially be towards that 200 SMA, and even I do have a line level of support there at 258.89, close to where there is a gap to fill at 255 and change. Below that, then you have another gap to fill there around 222. So we still want to see volume to the upside here. If this is going to be a true level of support, it would always make sense that anytime a ticker comes down here to the 200 moving average to find some support, see if it grabs some liquidity there for a push up, or if it doesn't, if it starts to slowly come up on low volume and it fails, you might be coming even lower to the downside. On the weekly, we do have this bearish ABCD pattern. This completed the type 1 reaction, guys. And it fell below target 1. It actually closed below the 50 EMA here, and it is calling for a retest here at 50 SMA there around 267, kind of close to where that gap fill is. And there is also a retest line here at 248 and change. Completely oversold on the weekly right now, but we're going to see if this actually finds some support. So definitely keep a close eye out on Tesla. All right, guys, jumping over to Google here. So Google on the daily currently has this two bearish patterns, a white swan and a butterfly. I actually played this to the downside after rejection of PT2. We know that the bearish white swan, if we reject PT2 here or fall through below PT2, there's something more macro taking place, and you had just continuation to the downside. For the white swan, is calling PT3 there at 151.91. You actually, if you look at the butterfly pattern here, at the completion of the pattern, you also came down all the way down to T2 at 169.47. So harmonically there, you're now looking for a potential reversal back up. You don't have the HSI arrow triggered, even though it did find some support here above T2. You're not getting that HSI arrow yet for that potential bounce to the upside. Targets to look to the upside here to potentially start getting bullish on Google from the creation of the where the pattern generated here to the low. You need to reclaim at least the 618. That's at 191 to start getting bullish here again on Google. We're nowhere near close to those levels just yet. So levels to watch out here would be at 200 SMA off the bounce of the retracer from swing high to swing low. That is going to be at 176.36, very close to that 200 SMA. Above that, then you have the 182.22, right close to where T1 is at. And then you can look towards that zone around the PT1 there, around 190.49 of the 618, which is very close to that level as well. So right now we're going to see if there's volume going to pick up again. One thing to note that may be coming back up to test a 200 SMA, come back below T2. If you lose T2, then you can start looking targets to the downside here for Google. I do have a level of at PT3 at 151.91 should it play out, and there's also a gap to fill there. If we go over here to the weekly, you can see that the weekly, you do have this bearish ABCD pattern. You had an HSI arrow here triggered. You fell below ABCD there. You are closing below the 50 SMA, so the next target would be 162. And there's a huge retest line here all the way down to 148 and change. Last time you came up above here in July, you came all the way down to test it, and you could be coming back down to these targets. Again, HSI still has some room to the downside. It can come to the extreme case there back with in August, where it went down to like -8. So obviously we're going to see if that is going to be the case for Google right now. But definitely there was a huge amounts of selling pressure coming off of increase in volume. So the bulls need to step up here, or you could see potential more downside for Google. So definitely keep a close eye on Google. All right, guys, jumping over to Meta here. So Meta formed a bearish steep crab here. You can see it invalidated and went above hop, and you can look at these levels of support. It did finally, after the creation of the HSI arrow, start to come down with volume here. A lot of selling pressure. You came all the way down to T1 to complete that type 1 reaction at T1 at 643.39. So if you take a fib retracement from the swing high here to the swing low for Meta, you can see that you did find resistance below the 50 SMA, and now you did come back to double bottom there, right? You've double bottomed at the T1 643.39 here. So we're going to see if this is going to be a W formation. A W formation, harmonics would obviously be a bearish harmonic pattern to the downside, but you would first need to create a level to the upside here. Point D could be anywhere up here. So obviously still early to tell. You did find a level of support there on Friday with volume. You did trigger the HSI arrow with the hammer candle. So next level to the upside harmonically here would be 674.49. Above that, then you have 682 and change. And you can look at hot by 699.72. Above 699.72, you can look at previous all-time highs and a potential new all-time high. If you fell resistance here at XA, the next level I'd be looking at would be again the T1. I do have a support line at 636.26. Below that, a retest line at 627 and change, and then you have the completion at T2 for the full type 1 reaction at 619.19. If we go over here to the weekly, you have a HSI arrow that triggered 2 weeks ago, and then you had follow through off of increase in volume. One thing to note that's very interesting here for Meta is that if you look at volume to price analysis, the spread of the candles, notice how last 2 weeks ago you had that HSI arrow off of low volume, and the spread of this candle you could argue is much smaller than this one. So this could be a potential trap to the upside here for the bulls, thinking that okay, we found some support here on Friday with high volume, and we could be looking at upside. But the weekly does not suggest, if you're following volume to price analysis, that is an anomaly candle, because the spread is much smaller than this one. And you could argue that this is potentially coming back for a potential inverse cup and handle. You come up here and you could fail if this pattern plays out. You could fail this to the downside. So we're going to have to keep a close eye on the weekly time frame here, because if that's the case and the weekly is actually showing us what's actually happening here with the anomaly here, and this is actually playing out, then we could see that this push up here is not supported. So definitely keep a close eye on Meta, because there could be potential more downside. Jumping over to Netflix here. So Netflix still pretty strong here. You haven't really retraced too much to the downside. You did come to the test level of support there and still find it support above the 50. Ultimately here, the next level I'd be looking at here to the downside is at 938.34. Below that, then you do have a gap to fill around 918 and change. So you have a bit of support here. The HSI arrow did trigger as well on the daily here with high amounts of volume. The push down also was warranted. It was off increase in volume. So we're going to see if there's actually going to be some support here off of Netflix here. One could argue that this is potentially forming a head and shoulders pattern. You have here the left shoulder, the head, and now potentially the right shoulder. Your neckline is going to be here, basically where that 50 EMA is at. So if you break to the downside there, you'll be looking at targets all the way down to maybe even the HSI dot retest line there at 893.22 and all the way down to 847. If we go over here to the weekly, there's no current harmonic pattern, but one thing to note is that we did trigger an HSI dot off of increasing volume. So we'd be looking at levels here again to the downside. My support levels are 938, 921. Maybe if you lose that, if you come down here to fill that gap, you come all the way down to that 847 down the line. But still not clear. The HSI did cross the midline. We're going to have to see if there's volume follow through to the downside this week on Netflix here. You are about to get potentially a 921 crossover here, so we can see that also rejection there could come back to fill that gap. So definitely keep a close eye out on Netflix. Jumping over to NVDA here, guys. So NVIDIA had earnings this week. Obviously, it was a nothing burger, or the expected move. I think the expected move was around 10%. And you didn't quite get that, but I thought that this was going to come back down after earnings, and it's exactly what it did. You came down, made a little bit of money here on the put side on the week for NVIDIA. Could have made more, closed out a little bit too early on those, but nonetheless, the put side played out. You did come down and lose a 200 EMA on Thursday, but ultimately Friday you got some volume to reclaim those levels. So what can we expect here for NVIDIA? You did come down to test that 120.88. Last time you came down here, you pushed up all the way up to the mid 140s. So that's a huge level of support here should it hold. If it fails below 120, you could be looking for more downside in a range towards $97. Why $97? As you can tell, the last time you came above here towards that 132, you lost 120 and change. You came all the way down to 88, found some support. Ultimately, you still closed above 97, and then you also came down here as well to 99. So that's where I have a range here for NVIDIA should it lose that level. If you climb back above here, the 200 SMA to the upside at 126, the next level you're looking to close above is 132.66 to start getting a little bit more bullish again, an attempt at 144. 144 is going to be your level here to break to the upside to potentially test previous all-time highs and maybe breaking out of new all-time highs. But right now we're going to have to see if NVIDIA holds these levels to the upside on the weekly. We do have a bearish dragon pattern at play. Let me remove my drawings here so you can see more clearly. You can see that it lost BC there at 135.05 and it came down to CD there at the 1272 of the pattern at 119.71, where there is a huge level of support there on the retest line around 115 and change, just slightly above the 50 SMA and EMA there. So if you do lose CD there, you could be looking towards PT1 to complete the type 1 reaction off the dragon pattern at $90.69. So very key level here for NVIDIA. If NVIDIA starts to lose these levels, man, there is a potential downside incoming below even $100. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here, guys. So Bitcoin, been saying that this was going to come back down to 76K for that T1 there. It's calling 76.3K. You did get close. You did go as low as 78.2K. And just today, Sunday, Trump came out with a tweet supporting Bitcoin, Ethereum, and a bunch of others here. So crypto reacted positively and pushed Bitcoin all the way back up to 95K, reclaiming that HSI dot retest line. So you can see you could break above the HSI dot retest line. You can start looking again towards that 100K. When we broke below the retest line, it got bearish. So right now we are at that level to see what happens there. You did form the HSI arrow on Saturday. See if it can climb back above to the upside, forming that also closing above that midline. So if it decides to go to that overbought condition, that's going to be again towards that 104K where you do find some resistance. So you're in this channel here with the HSI dot retest lines here. You can get bullish above, break above it. If you find a resistance and break below, then you're looking again to test a 200 SMA and maybe even more downside. If we go over to the weekly here, this candle is going to close in about 3 hours and 25 minutes from this video. Strong level of support off of that tweet. We'll see if that is going to be supported though. This could flip into a hammer candle potentially. The hammer candle could flip green around 95K, 96K. Retest line there around 97. You can start looking for upside. So right now we're just playing off the volatility of that tweet. We'll see if this gets more volume to the upside. So definitely keep a close eye out on Bitcoin. Alright guys, so that's all I have for you guys. I will be streaming same time as always. I always stream Monday through Friday from market open to market close, and I do stream over live on Twitch. So if you want to catch me there, link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.